Imagine transforming a small amount of money into something much bigger without any fancy strategies or huge risks. What if I told you that even with just a few dollars, you could start building wealth today? But here's the catch: you have to know the smartest ways to invest with limited funds. Miss out on these strategies, and you could be leaving money on the table. In this video, I'll show you how to make your money work for you, even if you're starting with nothing. Don't let the opportunity slip away. Start small. Investing with little money may seem challenging, but starting small is actually the best way to begin. You don't need a large sum of money to get started. The key is to make smart, informed choices that fit within your budget. One of the most important things to remember when starting small is to avoid high-risk investments. Instead, look for options that allow you to grow your money steadily over time. One option is investing in fractional shares, which allows you to buy a portion of expensive stocks like Apple or Tesla without needing to pay the full price. Another smart approach is contributing to a low-cost index fund. Index funds track a variety of stocks or bonds, giving you exposure to a broader market without having to pick individual investments. By starting small, you give yourself the opportunity to learn, experiment, and adjust your strategy over time without risking too much. Remember, investing is not about making quick profits, but about growing your wealth gradually. The key to success is consistency and patience. Start with what you can afford, and over time, your investments will grow. Low-risk options. When you're investing with little money, choosing low-risk options is crucial to protect your investment and grow it steadily. High-risk investments might promise bigger returns, but they also come with the possibility of losing your money quickly. That's why starting with safer investments is a smart strategy, especially for beginners. One of the best low-risk options is a high-yield savings account. While it may not offer the massive returns of stocks, it provides a safe place to park your money while earning some interest over time. Another option is investing in bonds. Bonds are essentially loans you give to governments or corporations in exchange for periodic interest payments. They are less risky than stocks and tend to provide a stable return. Certificates of deposit, CDs, are another good option. They are time deposits offered by banks with a fixed interest rate and a set maturity date. Although the returns may not be high, your money is safe, and you can plan for a guaranteed return. By starting with low-risk options, you can avoid big losses while still allowing your money to grow slowly. Over time, you can build confidence and gradually consider more diverse investments as your portfolio grows. Stock market. The stock market can be an excellent way to grow your wealth, even with limited money to invest. However, it's important to approach it with a strategy, especially when starting small. One of the best ways to begin is by investing in low-cost index funds or exchange-traded funds, ETFs. These funds give you exposure to a broad range of stocks, so you don't have to pick individual companies. They're a safer option than trying to invest in specific stocks because they spread your investment across many sectors, reducing risk. Another great approach is to start by investing in fractional shares. Fractional shares allow you to buy a portion of an expensive stock like Amazon or Google, making it easier to invest in companies that may otherwise be out of reach. This means you can invest in the stocks of big companies even if you don't have thousands of dollars to spare. The stock market also offers the potential for dividends, which are regular payments made by some companies to their shareholders. These dividends can be reinvested to buy more shares, helping your money grow even faster over time. By taking a steady, informed approach, you can start building a strong stock portfolio, even with a small investment. Patience and consistency are key to making the most of the stock market's long-term potential. Real estate. Real estate is often seen as a high investment option, but there are ways to get started with little money. One smart strategy is real estate crowdfunding, where you pool your money with other investors to buy shares in a property. This allows you to invest in real estate without needing a large down payment or managing the property yourself. Another option is real estate investment trusts, REITs. REITs allow you to invest in large-scale properties such as shopping malls, office buildings, or apartment complexes. When you invest in a REIT, you're essentially buying shares of a company that owns real estate. These investments often pay dividends, making them a good option for earning regular income while still having exposure to the real estate market. For those looking to buy physical property, consider house hacking. This involves purchasing a property with multiple units, such as a duplex or triplex, and renting out the extra units to cover the mortgage. It's a more hands-on approach, but can be a great way to enter the real estate market with limited capital. With careful research and a solid strategy, real estate can become a profitable long-term investment, even if you're starting with just a little money. Passive income. Investing in passive income streams is one of the smartest ways to build wealth with little money. Passive income means earning money with minimal ongoing effort, and it can grow over time while requiring less day-to-day involvement. One of the easiest ways to get started is through dividend stocks. By investing in companies that pay dividends, you earn a portion of their profits regularly without having to sell your stocks. You can reinvest these dividends to buy more shares, allowing your investment to grow passively. Another option is peer-to-peer lending. Platforms like Lending Club or Prosper allow you to lend money to individuals or small businesses in exchange for interest payments. While there is some risk involved, it can offer relatively high returns compared to traditional savings accounts. If you're looking for a more hands-off approach, you can consider creating digital products like ebooks, online courses, or even printable designs. Once you create and list these products online, they can generate income for years with minimal effort on your part. Building passive income takes time, but with small, consistent investments, you can start earning money without much active involvement. The key is to find opportunities that align with your interests and financial goals, and to let your money work for you. Long-term growth. Investing with little money requires a focus on long-term growth rather than seeking quick gains. The power of compound interest is one of the best tools for growing your investments over time. When you invest, your returns generate even more returns, creating a snowball effect that can significantly increase your wealth as the years go by. A great way to take advantage of long-term growth is by consistently contributing to retirement accounts, such as a 401 or an IRA, if available. These accounts offer tax benefits, and the earlier you start investing, the more time your money has to grow. Even small contributions can add up over time, especially if you begin in your 20s or 30s. Another strategy is to invest in growth stocks. These are companies that may not pay dividends but are expected to grow at a faster rate than others. Investing in these companies can offer significant returns in the long run, but be prepared for market fluctuations. Stay patient and don't make emotional decisions based on short-term market movements. Additionally, dollar-cost averaging is a powerful strategy. By investing a fixed amount regularly, regardless of market conditions, you can lower the impact of market volatility and ensure that you're continuously growing your investments. Long-term growth isn't about making quick profits. It's about staying consistent, being patient, and letting your money compound over time. The key is to start early, remain disciplined, and focus on your financial goals. Now that you've discovered the smartest ways to invest with little money, don't stop here. It's all about being smart, patient, and consistent. But what about saving money without making sacrifices? That's right, saving doesn't always require changing your lifestyle. Curious how to keep your money growing while still enjoying life? Stay tuned for our next video, where I'll reveal how to save money without cutting out your favorite things. You won't want to miss it.